Good morning, everybody. It is a beautiful day here in Chicago. A little bit snowy, a little bit rainy. You know, it is what it is. I'm Mark Sebastian. I'm the founder of OptionPit.com, and this is the Option Pit AM Volatility Report. Hope all are doing well. Let's talk about the market. Well, I think that GDP number gave them the spooks this morning, but I think they changed their mind on it, and I'll tell you why. I think that's further proof that there is no way we see a rate hike in, certainly not June. You're not going to be raising rates in a deflationary environment with the GDP growing 2.6%. All right, it's nonsensical to imply that, and so that's why I think we went from down 20 to, the NDX is now positive. The Dow is basically flat, and everything else is flat. The only thing that's really weak is the small caps, which would make sense, right? They're going to be the ones most hurt by a bad GDP number. We're still seeing a little bit of bullishness out of Apple. It's now through its all-time high. I'll be interested to see which direction it goes. Is it going to bounce here? Maybe. Amazon, blowout earnings. Just amazing how that just blew through the strike. So if you bought Australia yesterday morning, you're up over 100%. Google, not as much. All right, that's a loser. All right, Facebook, talk about your loser straddles. Keep an eye on that volatility. I want to see the vol on these guys really sink. So like VXGOG and Google. All right, I want to see that it get absolutely torched, and then I might take a shot at stepping in. So I'm looking for, into the 18s, and then I'm going to be potentially looking to scoop these. All right. Same thing with Facebook vol. I'm looking for Facebook vol to get a lot cheaper before I step in and buy it. And right now, if anything, the vol looks really overpriced because the stock's not doing much, and they're actually rallying the vol today. It's a little nonsensical to me. Gold finally catching a bid. The one thing to watch, keep an eye on TLT. Again, up more on this. Because, like I said, I think you're going to see bonds get more and more and more expensive, and it could be a quicker trip than maybe people realize. But like I said, I think that the Fed is going, by February, maybe it'll be clear, all right, that they are not raising rates. There's no, it's just not going to happen. After getting collaborated the other day, oil seems to have bounced and kind of found its spot. It's up a little bit more today. After having a rough couple of days. I do think, again, it's been within a couple of points of a bottom for some time. So that's that. And then, of course, keep an eye on housing. That's going to be one that I think we continue to see be strong. So even if they were weak in GDP. All right, folks. On that note, I hope everybody has a great day, and I will be back shortly